Hey, how you doing, everybody? I'm here with Michael Dunworth, the CEO of Wyre. How you doing today, Michael?
Good. Thanks for having me.
Yeah, it's awesome to have you on. So, explain a little bit about what Wyre is.
Yeah. I suppose like for us, Wire, pretty much the main thing that we do is we have done a lot of the hard yards in terms of, building out banking relationships and coverage globally, and sort of those on-ramps and off-ramps and all the crypto exchange piece. And we wrap it all up into an API, and we basically serve that to developers and entrepreneurs, or big fintech companies trying to move into crypto, or take advantage of that. So I suppose like the better TLDR would be crypto brokerages and exchanges will plug it in and have really deep liquidity that's compliant right away. Or if I'm like a fintech app, I can plug it in and open up, say remittance corridors for sending money internationally. So sort of we just give them the tools and people build whatever they want.
Cool, cool. So it's mostly controlled through an API then?
Predominantly, like all of our business, all of our partners, is 99. Actually, though, like probably 90% in terms of like a number, would be coming through our API, if not more.
Oh wow, so that's a big deal.
Yeah, no pressure to the developers.
So, how did Wyre come about?
Yeah, so I mean, like we were originally my co-founder and I, we met living in a hacker house in San Francisco. We'd both just moved to San Fran. Basically, long story short, that's not going to end up being short. But basically, what we did, we were like, oh, okay, let's build out like a one-click checkout for the internet. So it's like, if you wanted to go shopping on 5 different websites, you're not filling out all your details all the time. It was sort of like you go just like clicking around and just filling up this basket in like a Chrome extension, and then basically check out in one spot. And then what we decided, we were like, oh, well, how can we kind of get some awareness for this? Because, like you want to find people and want to find customers to use it. So we're talking about we were just like, oh, why don't we add Bitcoin? And we're like, okay, sweet. So basically people with Bitcoins could spend it and we'll go and buy the product for them. And then like Reddit, our Bitcoin, they just grabbed it and ran with it. And it was incredibly popular for them. And like, that was super exciting to us. So basically, like not even being sarcastic, it was probably 99.9% of our volume was coming from people spending crypto. And this was back in 2013. So this was right around just when that insane bull run happened in 2013. So obviously, if we're giving people a place to spend crypto, that's really exciting for them because they're just making like 50% increases a day because the price is going bananas. What's funny is actually our revenue stream was predominantly, we'd buy it with a credit card that was my co-founder's credit card. So he's got like basically the best credit score in like North America, it feels like, because he was spending like, 25, 30 grand a day and paying it back every day. But he wasn't earning much money. And the way that we made money as a company was we were getting 2% cash back on that card. So that was like a really cool revenue stream for us. Anyway, we went through that whole ordeal. We ended up adding wallets, in 2014, 2015, as the crypto winter started to set in, which is what we're probably about to bunker down for now. And like as we started adding wallets and sort of merchant checkouts and wallets, we had a lot of people ask about, they were sending money using Bitcoin, and they were like, look, I've got to go US dollars to Bitcoin. I send Bitcoins to Bitstamp and I convert them into euros and pay them into my bank. How can you guys be bothered making that just into sort of one experience? And we were like, all right, cool, let's see what we can do. And then we basically trialed it, and it was like, that was 2016, or the end of 2015, start of 2016. And it was like, 15 or 20x any daily volume we'd ever done. And we were like, at the time, that was really cool because, it was winter, like crypto winter. It was actually literally summer at the time. But it was crypto winter. And that was a non-seasonal thing, you know what I mean? Like there's no, oh, if there's a bull run, we're going to be well positioned. It wasn't anything like that. It was more just a case of people need to send money. They don't give a shit whether they're using crypto or not. If it gets there faster and it costs them less, ta-da, like people like that. And that was really exciting to us. So we'd sort of focused on that, and we rebranded as that came to fruition. We rebranded to Wyre because we felt like Snapcard had sort of been jumping along different hoops and stuff like that. We felt like just like a cleaner kind of, change of pace. And that's where we sort of emphasize like the developers and, our API and all that kind of stuff. At the same time, I suppose for us, I am not, Stanford grad and 3 years at Uber and then 4 years at Pinterest. And then now I'm coming out and doing my own thing and everyone's just like throwing checks at me in Silicon Valley. We're not like that. Like as a team, we're much more scrappy. And we always thought like, if we're not going to be the ones that are raising like 80 to 100 million and we're only going to be raising 5 or 10 million, we need to basically put every dollar to work really, really carefully. So we'd always focused on like being the plumbing, like putting ourselves in the plumbing. So using the API to be the infrastructure for a lot of providers. And that's the elevator pitch on how we became Wyre. It's a long ass elevator, I've realized. I'm sorry.
Yeah, that's awesome. And the growth's definitely been insane for you guys since then. So tell us a little bit about your new partnership with MakerDAO that you guys announced today.
Yeah, dude, MakerDAO. How good are they? Have you been following their stuff?
Oh yeah, we interviewed the CEO a few weeks ago.
Rune.
Yeah,
dude.
Yeah.
And I'll tell you what, they're a really good bunch of people. I remember I connected with them last year because we were sort of playing around with the idea, essentially, like if you look at what the business was doing, if you're sending money, we're converting it into crypto and then hedging it and then converting it out of crypto. It's almost like you're sending US dollars to euros and we're sort of price locking that for you so that you don't have the volatility. So obviously, naturally, it's sort of like similar to a stablecoin. And we were looking at, what does a stablecoin look like? And we were playing around with ideas internally. And, I went on basically just this binge of stablecoin related stuff. And then, yeah, one of my buddies was like, yo, have you checked out Maker? They're really cool. They've got a bunch of stuff. And I was just fascinated when I was reading about it. Firstly, I was fascinated because I didn't understand any of it because it was really just way above my head. I'm really stupid like that. But I read it like a bunch and I spoke to people about it. And after I learned about it, I was like, holy shit, like that's that's a pretty ballsy attempt at like a project. Like, do you know what I mean? Like you're making a global dollar with this whole sort of economic system and like loan system and stuff. And, I talked to them and I was just super enthusiastic about like, hey, what can I do to help? Or, like I started thinking in our infrastructure, right, we've got all these people like partners that are using it. So like exchanges and brokerages and all these people that you've most likely used their platform before, we're sitting right down the bottom of their architecture. And I was like, okay, we give US dollar balances to people. We give, Canadian balances, euros. How cool would it be if all those US balances were like an ERC20 version of a US dollar, so to speak? And that was basically what DAI was. And I was like, that would be amazing, being able to send my US dollar balance from my Wyre account to my Kraken account or my Kraken account to my, let's say, GDAX account. And I was like, that fluidity was really cool. And so I was just like, I kept joking with like some of the guys. I was like, I felt like a full-time employee there because I just wouldn't do anything but read or think. I was pretty possessed by it. And then as a company, we made an investment in them last December or November with, I think it was Polychain and Andreessen Horowitz. And yeah, just been trying to find a way that we can improve our customers' products and also bring something like that to market because that's pretty cool shit, basically.
Yeah. When I was talking to Rune about it, I read their white paper and I really didn't get it until he pitched it to me.
Of course not. No one gets it. You can't read that. It's like, unless you're like some brilliant scholar. I mean, yeah. Sorry, continue.
Yeah. So I was going through their GitHub. I'm like, what the hell? So anyway, um, I'm like, oh wait, consumer price index, and then I'm like, future of money. So basically, for everyone that's like, what the hell is Jake talking about? The realization I had, and everyone that really reads into MakerDAO has, is that if you can create a stablecoin that algorithmically balances the price of DAI, which is their coin, through their over collateralization process, you can create a stablecoin that's actually based on the consumer price index. So no matter how many dollars the U.S. government issues, you have a stable coin based on the price of consumer goods.
Yep. And like, if you think about that, I was just like, holy shit, like the applications for something like that was like bananas. I was just like, okay, where do you start going down the rabbit hole, basically? I was just like, all right, cool. Yeah, I found myself, I was just, every single thing I could think of. And like, one of the things is super interesting. Like, obviously, I think looking at last year, right? You saw all these tokens, everyone's ICOing, everyone's grabbing $50 million in 20 seconds. No one's building anything. No one's got any idea about anything. And I mean, for the most part, right? But these dudes have been like heads down grinding since like very shortly after Ethereum ICO, like back in like the early days of like 2015. Like, they have put in a lot of work and been like, I don't know how they do it, but they basically have been so patient, just very methodical every step of the way, and not sort of, I don't know, just like really long-term execution focused and not rushing anything, which is pretty critical. And I think that's really interesting when you compare that with like, other stable coins that, someone hears about crypto, 2 weeks later, they'd be like, oh, why don't we make a stable coin? That'd be a good thing. 5 weeks later, they've raised $50 million and they're saying, yeah, MakerDAO doesn't really know what they're talking about. I mean, a lot of teams, have challenges against MakerDAO and stuff like that. And I think that's super cool because, you want to progress and take constructive criticism. But I mean, and very few teams, even like protocol teams, like actual like legit teams, they have not put in as much work or as much thought and effort into it that these guys have. So it's insane once you start just looking under the hood. Yeah,
it's funny.
I partnered with them.
Yeah, I got on the phone with him and I'm like, okay, so this is just a mix between like Nubits and Tether. And then Rune, really good at explaining stuff. He just starts explaining it to you and you're like, holy crap.
Yeah, dude. And that's the thing is like, and it hasn't even gotten like exciting yet, because if you think about a single collateral DAI, right? So you can only collateralize to generate DAI. You've got to collateralize, ETH, but they're bringing out, multi-collateral DAI, and that is going to be really, really interesting. Probably not, 6 and 12 months, but if you look 5 years down the track, what that could look like, DAI has basically, it's agnostic in a way that it's sort of like, look, we're a stable coin, we've got a whole sort of economic sort of system underneath it, but if someone brings out a really awesome stable coin as well, great, we can absorb that, and that can be used as a point of collateral. So you've got the choice of saying, right, there's 2 stable coins in the market. Do I want to put all on one stable coin, or do I want to split it and collateralize it into, do you know what I mean? Like, you can basically make, like, collateralize your DAI with a stable coin. But then there's like, if you think even more interesting shit of making like a market neutral DAI. So right now you collateralize it with ETH. If ETH goes to 0 in 20 seconds, then the whole CDP, like all that system, everyone's going to get liquidated. But if you look at, say, for instance, when derivatives come out, like for instance, so DYDX doing, the Ethereum short, I think it is. Imagine collateralizing, with a negative, like a market. So you've got Ethereum, and then you've got, say, the opposite bet of, a short. So essentially you can have, I mean, that's a very high level example, but you'll be able to collateralize with like predictions from Augur markets, like all these kind of different things that are going to be,
Augur?
Well, I mean, what? I don't know. Predictions is, by the way, prediction market. That's so funny. When I hear people say prediction market, I'm like, what the fuck's a prediction market? And I like Google it, and I'm like, oh, gambling, right? Yeah. That makes complete sense. And it's like, oh no, we don't call it gambling because gambling is not allowed in the US. We call it predictions. And I've always find that really interesting. And the new version of that is kind of like I've noticed like a lot of these like exchanges and stuff that they're getting like exemptions, or they're looking for exemptions with legal teams. They're not exchanges, they are bulletin boards. Just extremely high frequency bulletin boards of people like buying and selling off bulletin boards at like 100 trades a second. But you know what? It's part of it. Like this is part of moving the needle and, pushing the boundaries and, making a change, because, if you don't do that, then it's just going to be stuck in the old ways of, having to adhere to the licensing that like NASDAQ has or something. I don't know, but it's good. It's good pushing the boundaries.
And with that, you get the problems with NASDAQ, right? The Federal Reserve, or reserve-backed currency fraction, or what am I thinking of?
You thinking fractional reserve back?
Yeah, where you have more shares issued than actual Bitcoin, and the CTFTC doesn't even cap it at 23 million.
Yeah. It's basically saying, oh, okay, all right, guys, we want 1-to-1. Okay, cool. 1-to-1's the ratio. You know what? Let's just make it like, look, you give me 20%, give me $20, and I'll give you back 100, and then we'll just say it's all good and you'll pay us back. It's like, yeah, it's not wise. I think we learned that in 2008, and I mean that's a whole nother thing. But yeah, look, it's really interesting actually, because I think of exchanges now as all these tokens and like, as you start getting like security token offerings and all that stuff, I don't think in like 18 months from now, you're probably not going to see another startup make it to an IPO. It's not in the like the startup doesn't want to do that because that's just way more complex and difficult. And the investors don't want that, because the investors that are funding startups, like whether it's like, I don't know, Andreessen Horowitz and all these like firms, they're frothing at the mouth now with this stuff, because they're like, oh, fuck yeah, I don't have to wait 5 years or 6 years for sort of my liquidation, like my liquidity event. Great, let's get them a security token offering, and then we can just flog it, a year later if we wanted. But that said, all this value that's going to be captured on these networks, you've got these exchanges, right? And so Kraken or Bit, whoever it is, they're listing tokens, and as those tokens appreciate in value, which is what's been happening in that bull run, over the next bull run, the infrastructure is likely going to be much, much more robust, in that you've got collateralized shares, you've got collateralized property, you've got all this kind of stuff that people are thinking of doing, and they're going to do it and try it, and whether or not it works or not, I'm not sure. But essentially, exchanges aren't just exchanges now. They've got people's houses on there. They've got people's company, equity, all that stuff. So you're going to see these guys have like, I would not be surprised if they're sitting on like 100 or $200 billion worth of assets under management. Like they're going to be super banks, basically. Man, I don't want to be the security guys on those. I mean, we have to do the same stuff because we're doing a lot of that ourselves. So yeah, glad I'm not our architect.
Yeah, it's insane. These
you guys are glad I'm not our architect too.
And I mean, you're really answering questions as CEO that you would of a financial institution, right?
Pardon? Sorry, it cut out then. Sorry, mate.
Oh, and you're really as the CEO of this thing, right? Coming from a tech background, answering questions like you would if you were the CEO of a bank.
Dude, yeah, like, I mean, it's basically like, we have the same regulatory compliance obligations that everyone does. We've got security policies, and if something does go wrong, you're going to be like, what happened? Like, and it's just so much more damaging because like if you look in the past, like exchange hacks and stuff. Here's a really interesting thing to think about, right? So if we think about Mt. Gox getting hacked, and Mt. Gox got hacked, whatever. Let's say 500,000 Bitcoins, or $500 million worth of Bitcoin, and that affected, let's say, 250,000 users, right? You and I, we all lost 10 Bitcoin, whatever it is. Now, the stakes are so much higher in that if anyone gets hacked now, it's not 250,000 users, it's 5 million users. Like, Kraken, Binance, all those guys, they've got millions of users now. And even if the sum, like the headline isn't as, as dramatic as, Mt. Gox loses $500 million worth of Bitcoins, even if it's $100 million or even if it's $20 million, that's like 10 or 20 times the amount of voices that are pissed off because whether you're losing 10 grand or whether you're losing 6 grand or 4 grand, you're going to be pissed off. And so that sort of like that echo effect of, how that affects the whole ecosystem, that's going to be magnified just by so many levels. So fingers crossed that doesn't happen, which is why I'm super pumped about decentralized exchanges.
Yeah, they're definitely a step in the right direction. And MakerDAO has definitely been making some good partnerships there.
Yeah, dude. I mean, MakerDAO's got if you're a decentralized exchange, you want as close to fiat as possible because so many traders rely on that. When the market's like spewing its guts up or something, people can go, okay, well at least I'll just go back to like what people do is Tether. But I think if you're building decentralized like applications or things like that, it's hard to rely on Tether in that regard because at some point there is a point of failure in like it can get, they can get a door knock from someone who doesn't like them, and next thing you know, all the fund accounts are frozen and stuff. So I think DAI has like got a really long-term opportunity in that regard to be a truly sort of decentralized as it gets. That said, I think the concept of like those collateralized, like, oh, trust me, all the money's in the bank kind of those tokens, I actually think they're really healthy to have, and that's actually advantageous to the fully decentralized version because getting users or just general people to understand DAI in general, right, or a competitor of DAI, it doesn't have to be DAI, it's so far beyond what they're used to. They're used to like, wait, I've got a Venmo balance. Is it like that? It's like, no, sit down for 2 hours and I'll teach you economics. I don't know economics, but you know what I mean? Like it's a big education process. But if I go to you, oh, it's okay, yeah, it's like your Venmo balance, but we put your Venmo tokens on a Bitcoin, on a blockchain, you're going to be like, oh yeah, okay, sweet. Like the barrier to entry is not there. And then to get from there to DAI is manageable for them, but to go full leap forward, it's hard. So I actually think they help generally the adoption and the mindfulness and the education process, which is, super important. Not enough people read. They just sort of Lambo and YOLO, and then they just dip out when the market tanks, basically.
Yeah, it definitely goes against the decentralized exchanges philosophies, but I mean, at a certain point you have to. It's funny with the Tether stablecoin. I was trying to explain the problem in the context of a post about MakerDAO, and I had the different types of coins, right? So you have collateralized, you have purely algorithmic, and then federally reserved. So the other two I had these short descriptions, and then Tether, I just went into this long story about Bretton Woods and the U.S. removing the gold standard. And I look at the post and I'm like, oh, geez.
Man, I am salty.
yeah, it's definitely hard to explain some of the problems with Tether and even the dollar as a whole, by the way, which we were talking about earlier with the consumer price index.
Yeah.
But yeah, it's crazy what they're doing, and you guys are definitely in a awesome position now that you're really partnered with them.
Oh, man, I mean, okay, so people are like, okay, why do you need, like, why does it matter? And I'm like, all right, so if you're us, so what we'll do is, like, one example, one use case, right, in crypto, so we work, like, we'll bring all the, like, as much liquidity on the centralized exchanges, and then we'll aggregate, like, all the OTC desks that we're either giving or taking, or, like, liquidity from, and we try and squish that into a price that is really helpful for someone starting a crypto business, instead of them having to go sign up in 10 exchanges and blah, 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 blah. Now, part of that is we have people, for example, that we power that are, overseas, so they might be in Australia. So what we do is they store a large sum of money with us, like a fiat balance, right? They store that with us, and then they'll chip away at that and hit our API. When someone goes to them, like let's say they'll go to them, and you go to this our partner, and you go, hey, I want to buy $500 worth of Bitcoin. Here's my Australian dollars. You're going to give them the Australian dollars. They're going to hit our API and say, hey, I know we got money with you. Can you convert 500 Australian dollars into Bitcoin and send it to us, please? Do you know what I mean? Like basically buying it off us. And then when they resettle that float, like if they're doing like, let's say $1 million a day, there's a flight time in that capital. So when they initiate the wire transfer to us, they'll transfer, through their FX partner. And sometimes that can take, we'll get a confirmation right away, but it takes 48 hours to get there. I'm like, yo, if we have DAI, we're straight away. Like it's right there. It's like instant. And so we win because it's less capital outlay. And they win because obviously it's, more real-time transacting. It's interesting. So like on that same note, people are like, I don't really get it. Like you've got like a US dollar balance anyway. Like what's the point? And I'm like, I'll tell you what the point is, dude. If you think about trading, right? Crypto is really interesting because crypto markets typically operate, like when the banks operate or, 9 to 5. Crypto is 24/7. It does not take the day off on Chinese New Year, Christmas, whatever it is, like your special holiday. It is not taking a break. And that means on a weekly basis, a typical trading windows or bank hours, so to speak, for fiat transfers, right? That's 40 hours a week. Now, with crypto, it's 24/7. That's 168 hours a week. So you have a 420% throughput difference that what's happening, everyone's trying to like net settle and be like, yeah, we'll extend a line of credit so that you can trade for the weekend and all these kind of different things. But the reality is like, man, if we all were like, yo, are we cool? Are we all good? Yep, DAI's worth $1. Okay, thank you. Good. Let's use that. And we've actually, we've been pushing that pretty aggressively because like for them, you think about forget about just the time frame. If you think about it from trying to like be like being an engineer and you have to integrate a bank account with no API and you've got to use a screen scraper from like Yodlee, and then you've got to build some sort of custom internal authentication for 2 of the treasury team to sign off on, blah, 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 blah. That becomes really painful versus, oh, I've just integrated the blockchain and I can see it settled right away. Here's a link. You can't call me a liar because there's a whole bunch of proof of work supporting this. So when you think about that, like, dude, it's just insane how many more efficiencies beyond just the obvious ones, how much more it makes businesses so much more efficient, more cost effective, easier to start.
And I'd imagine the phishing potential in there is pretty high, right? You're getting a wire transfer of $10-15 million.
Yep.
So one of the things we've seen in real estate is they'll hack into these real estate attorneys' accounts and they'll be like, hey, client, can you wire the money here now? And they'll lose $250,000, $500,000 deposit. Yep. You're talking about potentially $5, $10, $15 million over a wire.
Yeah, and I mean that's like the biggest thing is phishing is, or like impersonation, all kind of social engineering is typically the best access point to bring down the house. And that comes that in itself comes with so much like training. Everyone that comes into work. You got to be conscious of privacy stuff, and people talk about privacy and data security and stuff, and people talk about oh, what if you got to hide? It's like you don't realize just how many hyenas there are out there. Just they're salivating for you to drop the ball and give them a tiny window of access. BitPay, they had a phishing or an impersonation situation. I think it was 2015, and they lost I felt really bad for them, obviously, but they lost a ton of money, and the insurance company I don't think covered it because they were
yeah, they never do.
Sick, yeah, right.
Despite a 1 or 2% of revenue premium.
Oh yeah, yeah, yeah. I know. That's what I was about to say. Like the assets under management that you have, it's typically around a 1.5 to 2% AUM of assets under management on an annual basis. All that to get them just to say, nah, you fucked up on your side. But no, I think like I mean now most of that sort of operational like OPSEC stuff, the people doing like we're really conscious of it. We'll do like a bunch of Skype calls, or we'll already know if you're using your old device that's already been fingerprinted, so we don't have to worry about trying to make obviously balance between user experience, but also like not being irresponsible. It's like lots and lots of money, and people can you can be very easily desensitized to how much money you're throwing around when you're just like pushing buttons. You're like, oh yeah, 500,000 there, 1.2 million. It's like, whoa, this is like all the rent money for this month in San Francisco. Dude, have you seen the rent prices in San Francisco? Oh, it's basically those numbers that I just talked about. Anyway, yeah, but it's interesting how quickly people can get desensitized, and you've got to like really kind of remind people like, yo, there's a lot of money on the line. Yeah, it's interesting.
Yeah, and I mean, plus, you could have the best training internally. All it takes is one person outside to send an email, right? Maybe they went through Sender Protection Framework and got around that. Be like, hey, can you wire the money here instead? We had an issue with the bank, crypto law.
Yeah. No, totally. And you know what? Okay, you know what's really interesting? So we look a lot at like all these different like things that people do, and it's bad practice usually if you understand what people do. You don't want to tell them that you know that, and that's like I think that's actually like one of the things like when you look at, let's say, people always get the shits when their crypto exchange account gets closed, and it's like, sorry, we can't tell you anything, but your account's closed now. It's like, what the fuck? Like, why? Give me an answer. Because the moment you do give an answer, like it's because obviously you want to be like, yo, I know you're a customer of ours and we really valued that, but I can't tell you anything. And it's like, okay. And the reason why is because the moment you start disclosing, oh, well, your account got closed because, you had more than 10 transactions come from an illegal dark market site, or, something that basically goes, that's what I got to look out for. No worry. And people just learn about how to gamify it. So, yeah, that's like really interesting. So, but with like the security stuff, it's really interesting. Like Google is usually, the Google Forms and like Google Docs and sharing Google Docs and stuff like that, especially when it's on mobile. It's, they'll get a link that looks like hey, they edit this document, and, they'll go to open it and it's got an SSL certificate. When you're doing a lot of stuff all day, every day, it's hard. You kind of subconsciously see the green padlock on your phone, the sun's on your phone, so it's kind of glary. And, sometimes if people have, we've looked at, like heard about like a ton of different scenarios, but people click on it and what happens? Basically, it'll take you to a Google login, and you log in, and bang, there's keys to the kingdom, and everything starts from there. They'll take a whole data dump of like any Google Drive stuff, and one of the most interesting things, they'll set in your Gmail, they'll set an auto forward to some random address, and you never look for that because you're like, okay, change my password, I've done this, okay, cool, and then like 6 months later, you're like, this motherfucker. Oh, and it's like,
yeah. Or even better than the fake domains, right? gdocs.ey is when they do the Google single sign-on. So it's like, authorize this application.
Yeah.
It's just, it's incredible.
It's insane. And people just like, people new to the ecosystem. I mean, we've seen this actually somewhat recently with people that are newer to the ecosystem. There's so much money on the line now. Like teams are raising huge amounts of money, but they're not as scarred and like burnt from this industry, from just like being DDoSed every other day, or like, all these sort of scenarios that you've been through. You kind of get battle tested. So yeah, some people have been really unfortunate with like, tripping over the wires or, whatever the scenario is, but yeah, it's a bummer. It's a real bummer.
Yeah. So, what we spent a while there. We spent a while there on fishing.
I'm not laughing about people losing money.
Yeah.
I'm just like, dude, it's so funny.
Because yeah. So, moving on.
Sorry for swearing.
Yeah, so you guys raised a Series A in December of 2016.
So we announced it in December, but yeah, we closed it. I think it was like August. But yeah, it was.
Oh, okay, so that's not as bad. But anyone listening to this that knows what happened in December of 2017 is probably wondering, in hindsight, how you feel about that.
Oh, well, I tell you what. Firstly, I'm like some people can juggle really well. Some people can ride a bike really well. Some people can raise money really well. I can't juggle really well. I can't really ride. I'm shit at all three, basically. But we raised money in 2016 because we needed the money, and that was just sort of the next chapter for us as a company. And that was a really fantastic thing for us. But obviously, 2017, everything just like got put on steroids, basically. Valuations, velocity of growth, all that kind of stuff. Having said that, I mean, we had a lot of opportunities and we were approached quite a lot for the idea of doing like an ICO and things like that, and by actually like very reputable investors as well. The thing is though, like, I mean, with valuations, right? Everyone loves like the big exciting headline of like raises like $1 billion valuation.
Unicorn.
Like unicorn, right? That's great, but dude, if you're raising at that and your numbers, especially in crypto, right? Like let's take a graph, right? So crypto goes like this. If you're raising at the peak at some like insanely crazy valuation, if you roll off that peak, the delta between the two has now gotten gnarly, and you're basically, the shoes you've got to fill have just gotten way bigger. So I'm much more, not conservative, I'm just more realistic. Like I don't want to raise at like a 600 times earnings unless we've got some insane sort of velocity of growth that would justify it. I'm probably the most fair entrepreneur when it comes to that shit, because I don't want the burden of having to grow into some $1 billion valuation. Like, do you know what I mean?
Yeah, and I think there are two split ideologies there. There's the conservative one, which is yours. Then there's the, we better raise as much money as possible right now before the valuations drop off, and then we won't have to raise again for 5-10 years.
Yeah, but here's the thing. If you're like, okay, so people that raised money last year, now we're starting to see, okay, so basically if you do an ICO or something like that, you turn into a publicly traded startup, basically. So anything, like, Mark Zuckerberg comes out tomorrow and says, I'm quitting Facebook because, we lost all our data, the stock would tank. In the same way, if you're running an ICO and it's like, we've got, this advisor from this place and this VP of engineering that was, formerly at this place, the moment they get taken off the website or anything like that, people start being like, the rumor mill starts, and now you've got your coin getting chucked around like a yo-yo on Binance, and it's like, it's fascinating. And I think that's like a really interesting dynamic in general, is like how you seed the community in general. So like, if I'm raising money, do I want everyone to have, like, everyone to buy into my token, lots of token holders, and then do I want to list it on Binance? Or do I want to take like a more patient approach, which is like, case in point, Make It Out, right? They've been at it for a while. If you look at the amount of wallets holding Make It Out, like MKR, to all these like just insane coins that have got 70,000 wallet holders getting listed on Binance, you can't seed a network. If you're building a network, you can't seed it correctly if you basically are just opening the floodgates. Like, it's an early ripe, early rotten scenario. But if you look at Bitcoin, right? When Bitcoin first started, if Satoshi started posting about this anonymous online currency, but he was, instead of posting on cryptography forums, he posted on like gambling forums and being like, guys, you can use this to gamble. Like, how different would that have propagated out? Do you know what I mean?
Yeah.
So I think that's super interesting. And what's really scary is like, so many of these teams raise money. They raise money at like, $15,000, $20,000 Bitcoin. And like, literally, I remember hearing them saying like, oh yeah, no, Bitcoin's easy going. We'll probably sell something when it's like 30K. And then, we'll probably like hold on to the rest. I'm like, yo, dude, you should sell a lot of it and keep some maybe. But none of them have any like, they've got like they're raising 30 to 50 million dollars with 4 engineers, and we used to be at Google, so everyone should get excited. It's like not a single asset manager that knows how to manage money like that effectively, like, hedge fund or anything like that. It's just sort of like,
it's like, we don't have a CFO, but my uncle was an accountant, so it's fine.
Yes, and then we have an advisor that once walked into a PwC, PricewaterhouseCoopers office, and we can put the logo on the website and everyone gets excited. Look, it worked wonders for that whole formula. It worked wonders. I mean, it's going to be interesting to see how many teams deliver. You're going to have either teams are going to not deliver and fail sort of publicly. They're going to deliver, or they. I was actually going somewhere with that, and now it just sounds like a stupid comment. But yeah, basically, it'll be interesting to see what sort of comes to fruition, because it's a year on now. It's a year and a bit, so it's all starting to trickle in. Like, are people getting to market? Like, I mean, you look at 0x, man. 0x have crushed it out of the park. Like, I mean, we put a post up about their token model, which was, I mean, mixed reviews. But I mean, like, we're a similar company to them in a way. We aggregate a lot of liquidity, and we're trying to drive liquidity for people. So, we were coming from a very sort of, like, hopefully a helpful side. But like, 0x has shipped a lot of code, a lot of product. They've been incredible. They are the benchmark, in my opinion, from start to finish, like where they are now. The whole way, their ICO, the amount of money that they raised, it wasn't in, like, it was a lot of money, like $30 million. It's crazy, but it was wallets, allocations, everything like that. I feel like they are a good example in the ICO capacity. And then, yeah, but now you've got teams. Dude, this is how scary this is, Jake. So some teams are now looking at how to raise their next round, because an ICO is like a one bullet, you know what I mean? And now they're sort of thinking, how do we like get acquired by a private equity? Like, some of the formulas and ways people are trying to construct this, I'm just like, oh my God, dude, you know what I mean? It's fascinating. People just don't let up. So,
That's insane. So speaking of the future, where do you see Wyre in like 5 years?
Oh, that is a great question. I mean, I think where we will be is a infrastructure provider for, more partners, powering more people, but probably delivering more sort of more robust options. So right now, people use us and it's all dealing with money. So you can, on-ramps and off-ramps, MSB compliance and all that kind of stuff. In 5 years, I would say they'd be doing that, but it would also be with securities. So, they'd be able to meet the standards that are needed with like FINRA and the, like an alternative trading system and broker-dealer. And then also with the CFTC for like, different like instruments or like derivatives products. So options, futures and things like that. Right now we power, we're sitting under the hood of brokerage services, exchanges, recently a bank as well, which is super cool because we get to like help them, scale all their crypto stuff, and that's super exciting. And these people are going to want stuff like their market, the market appetite, just like we've seen people go from buying and selling Bitcoin to buying and selling Bitcoin plus, 50 other tokens. And then it's going to be 50 other tokens plus real estate securities plus all this stuff. And then it's going to be options trading, blah, blah, blah. So basically, we are literally going to be walking around planet Earth just trying to get more licenses, more bank accounts, more smooth on-ramps, off-ramps, and just letting people build really cool shit, Because it's... No, not yet. Oh, it's killing me. But if you think about it, like, that's one of the things, like, we had like this light bulb moment as a company where it's like, there's no way this industry is going to move fast. Like, it's moving insanely fast, but it should be moving much faster. But there's no way it's going to do that if everyone has to have, a 6-week to 9-month onboarding process to get a bank account as a crypto company, or if everyone has to get legal opinions and sink all this money, like the barriers to entry are too high. So if we can be like, Jake, go build your amazing, cool application on crypto. Here you go. Here is all the headaches in a box. You're like, okay, great. I don't have to worry about that shit. Do you know what I mean?
Yeah, it's definitely an awesome
That would be
concept.
awesome to be able to get to that point. That'd be amazing. And I suppose like for us right now, like that's what we've excelled at so far. Like, I mean, most of our partners and revenue and all that sort of stuff has been driven by that. I think it's just basically doubling down on that and, you know, maybe, just literally not taking one for the team because everyone's got to do stuff, but it would be amazing if we could get that done and really help people not have to give a shit about it. Trust me, it is just the biggest punish ever. So, yeah, 2 out of 10, do not want.
All right, awesome. So I think that's it. Thanks for talking to me.
Dudes, no worries. Happy to talk. Thanks so much for having me on. Appreciate it.